Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash flowing properties in today's market. Here's your host, Gabe Peterson.
All right. Welcome back to another episode of the Real Estate Investing Club. Happy Friday, everybody. We got our sun back here in Seattle, so I am super excited. I'm hoping this is the harbinger of the summer and it just stays here forever, because my favorite season is summer here in Seattle. If you guys don't know, it is the best place to be during the summer. Not during the winter, but during the summer. This is where it's at. It's a good day for another reason, because we have Cody Payne with us on the show. Cody is with flexbusinessparks.com with Colliers down there in Texas in DFW. He does flex space, small bay industrial, and it's not something that we've exclusively talked about on the show here, so I am super excited to jump into it. Cody, thanks for hopping on the show.
Oh, man, I appreciate it. And I got to disagree with you. Texas is the best place to be in the summertime.
There you go.
I think so.
There you go. All right, man. I told you before we got on here, we always like to start with stories to hear how people got to where they are. So why don't you take us back to the beginning of your story and tell us, how'd you get to where you are?
Yeah, I mean, so I started in 2005. I was actually a car salesman and, wanted to get into the commercial real estate side, and started working for a local office out here in Arlington, Texas, which at that time, nobody knew of Arlington. And so I started working for him, and he did large industrial tenant rep leases. And he didn't want me messing in with any of his stuff. So he said, hey, look, go lease and try to sell small bay flex industrial. And at that time, it was not popular at all. It was a dog of a product. People called it like the dirty fingernail asset class. And so I did a lot of that. But luckily, it has evolved, transformed. And over the years, especially, since, 2015, 18, 20, 22, I mean, it just continues to get better and has really grown as an asset class. And if you look at it today compared to 20 years ago, I mean, it's completely different. And so built a great team here, guys. We've been together a long time. We help people develop it. Our main forte is we sell them all over the U.S., but we help people develop, help people buy, help people improve. And so, we love what we do. Just came out with a great book to help people do it as well. But yeah, that's my story. I actually got married as well, if we want to add that on, earlier this year.
Congratulations.
Hey, thank you. And so just working on completing other stages in my life.
I love it, man. Yeah, so small bay industrial has definitely, I feel like in the past couple of years, it's not like the most popular asset class, but there's been a lot more talk around it. And so in your opinion, why has it become, what has been the impetus for it to become popular? Like, why are people looking into it more these days?
So that's actually a really good question. We get asked that all the time, is why has the popularity jumped so much over the past 4 years? On the buyer side, it's going to be because of inflation. And so besides self-storage, it's one of the best inflation fighters you'll get in commercial real estate. And so we've got a lot of people coming from the office sector to small bay flex. We've got a lot of people coming from retail and even multifamily. And because whenever you have a tenant leave in an office building, as you know, it can be very costly to refinish it out, and also the time on market and whatnot. And so on the small bay flex side, very similar to storage, is when a tenant leaves, the refinishing out the space is generally on the cheaper side, very minimally. And the tenant pool also has continued to expand as well. And so, a long time ago, these just...
on that point, I don't mean to jump into this, but
No.
why, who is the customer for small bay? I know it will range, but when you're talking about the pool of people out there available that are looking for these small bays, like who are the people that are renting these?
So you've got them anywhere from, small general contractors, right? Landscapers, pool companies, cabinet guys. But that's actually the unique thing about it, is it has expanded, because that's all it was back in the day, was just companies like that, electricians and whatnot.
Yeah.
And now you can go to some of these parks and you'll see retail tenants there, you'll see commercial kitchens there, you'll see office tenants there.
Hmm.
It has expanded quite a bit, and a lot of that is because we're actually selling a park out here in Fort Worth right now, and it's got several retail tenants in there.
Interesting.
And I was actually
Oh, I
talking to
can
one of them,
for
and they were
retail.
like, "Yeah, they
I
were like, we don't need frontage anymore."
yeah.
And our business isn't derived off of people driving up to it and seeing the
Google.
location.
That makes
Yeah,
sense.
and
Yeah.
so they've got a space there. It's very flexible for their needs. It allows them to expand and downsize at need. The rent's cheaper for them as well, and so it's not uncommon to see retail guys and showroom companies going into these spaces.
That makes a lot of sense. I never really thought about just the fact that the internet has really provided eyes to these properties that would otherwise not have been seen just because they're not on the road. So now that you're just Googling whatever, it'll pop up on Google and you'll drive to it versus seeing that there's a brewery on the street. And that's actually a good point. I've gone to a few breweries recently that have been in these small bay industrial
Oh
places.
yeah,
Just like in the middle of them, you wouldn't know it's there unless you pulled it up on Google and Googled brewery, and there it was.
yeah, and there's CrossFit and gyms and
Mm.
all sorts of tenants that go into these now, and so and also the commercial kitchen space expanded quite a bit into this asset class when COVID hit.
Oh, right, right. Like back of the house kind of kitchen stuff.
Yeah, and places that deliver food, or like for example, there's a park in Keller that I guess they were getting so much business out of the Chick-fil-A out there that they ended up leasing a space to make for deliveries and events and things like that because they couldn't handle it out of their location.
Huh. Interesting. So I mean, all these different customers that you're talking about, they do have different needs. So when you lease up a new space, do you have to outfit it to fit the specific customer, or how does the turnover work?
So, and obviously that's going to be depending on, landlord area and how you work out the lease. But in many cases, in a lot of cases, because we lease it here as well, a lot of times it's just offered as, a
Look at
warehouse
that.
space with maybe but maybe with an office and a restroom. And if the tenant wants something else, they can
They
do
do
it
it.
themselves in a lot of cases. And so there's not a lot of finish out in many cases for landlords on these types of assets.
Interesting. So you guys do development as well. Do you see is the demand for this type of product really centered around, the city core, or do you see the need for this type of product in the tertiary markets and, going out from the main city?
Oh, it's being thrown up everywhere. We're working in a lot of states across the U.S. And I mean, you'd be surprised how much is being built in tertiary markets. And because it is such a flexible, that's why it's called flex space. It's such a flexible concept for an array of tenants that it works very, very well. Because I mean, you see kind of retail centers sometimes being built out of the flex space model just because it's a little cheaper on the build side. But no, you do see it in the tertiary markets. Obviously, when you go to sell it out there, the prices are traditionally a little bit different, just like any asset class. But as far as demand and construction and new development, we're seeing it all over the place.
Nice. Um, how about I mean, you guys, as I mentioned, you guys develop. What do you look for when you're developing new product? Are you looking for the same things that you'd be looking for, for self storage? You're just looking for high, population growth, job growth, or are you looking for more like the highways that you want to be on? What's the main goal?
So, it depends on the model, right? There's several different models. You got your efficient model, which is just your basic metal with a garage door and a walk-in door. You've got the showroom flex, which we like the most, which has a lot of glass frontage. It really depends on the model because if you're gonna do the showroom glass, you want a little bit better frontage on the building. But there's a lot of different demographics that we look at. Obviously we look at traffic counts, household incomes, home values, spending per capita. That's going to tell you how much money is being spent in that immediate area. Another big thing that we look at is homeowner versus renter. And we like that homeowner to be at least 70% because if you're going to have, a building that you're filling up with contractors and all these other people that are, providing services to the area, if you have too much multifamily in the area, there's not going to be enough business for those guys, right? There's not going to be enough business for the pool guys and the landscapers and whatnot.
Right.
And so
that makes
you
sense.
so you really want to focus in on that. And I mean, we can show time and time again where it's built in heavier multifamily areas and the rents just aren't as high and the on market leasing time is a little bit longer. And so you want to tailor to the area, and and also build the building that tailors to the tenants for the area.
Yeah, that makes a lot of sense. For people who are interested in this asset and they want to go out there and buy one, I'm assuming most of this is found on market. Are there a lot of mom and pop owners of this? Like, for self-storage, mobile home RV, we go out, we just do. Okay. So you guys, it's the same kind of thing. It's not like, traditional industrial where it's all owned by bigger companies. These ones, it's a lot of mom and pop.
Yeah. A majority of it is small private ownership. So it's going to be very similar to, self-storage back in the day. I know self-storage is heavier institutional now than it has been in the past. Flex just isn't there yet. And so it's on the rise. You've got a lot of institutions that are investing in it. As you know, Blackstone bought a bunch of it a couple of years back, and you've got quite a few others that are getting into it. But yeah, if you're looking at buying it, I mean, there's still really good opportunity. A lot of it's sold very, very quickly. We do a lot off market. And so it's a very tight niche asset class still.
What are like market cap rates for Flex?
If you want to take Texas, for example, and you have something that's fully stabilized, your rents are at market, you're pretty much fully leased. In today's market, early summer 24, you're probably going to be in the low sevens.
Low sevens. Okay.
Yeah.
Wow. Even with, that's essentially the interest rate you'd be getting on your loan is a low seven. So that's tough.
There's so many people. The reason being is because there's so many people from other asset classes coming to it. And so it's been a funnel for people leaving the office sector and retail and multifamily to come to something that has a little bit less capital involved in it.
Yeah.
And so that's the reason it's still selling very, very well, is because even your traditional flex buyers, if some of those have dropped off because of interest rates, we've got a lot of people from other asset classes coming over to it.
That makes sense. When you're looking at these to buy them, is there any like specific requirements that you look for in the structure itself, like clear height, the size of the front office, anything like that?
I like the clear height to be at least 18.
18.
You'd be surprised how much of it's 12 to 16. That kind of
the reason
hurts
for
people.
That is just because of the bigger trucks that come in there, or
no, it allows people to stack a little bit higher because you got so much e-commerce and you got so many home businesses that will go to these places and they need to maximize the space. And if you got a 12 14 foot ceiling, I mean, you can only stack so high. So these guys are really trying to get, and it's just like storage, right? Like, a lot of people don't want a 7 foot high ceiling in a storage facility. They want to pack that thing up as high as they can. And so it's really no different in these, because also the higher you go will also allow for you to have mezzanine space in some cases.
Oh yeah.
To then have more storage and
second story kind of stuff.
Yeah. And so I'm a real big fan of at least 18 foot clear height. I like side yard storage where you have a fenced in side yard for the tenants as well. Those are like gold right now across the US. And so
is that just because people can park their vehicles,
equipment, trucks, materials, all that kind of stuff. And a prime example, we sold 2 parks out here over off Metro Tex. One didn't have side yards. They were getting $10 gross. The other had side yards. They were at $12.50 to $14 plus triple net.
Wow.
So they were nearly $14 to $16 a foot difference just by having the side yard.
Yeah.
And so those things are like golden. So there's a lot of amenities you can do to these parks. People add on covered parking, they add on storage units. But side yards is by far our favorite.
Interesting. So in terms of your guys' company, what does the next 2 to 3 years look for you? What's the goals that you guys are going after?
We want to continue to help people build these across the U.S. We're a big proponent on that. We want to continue to invest and build them ourselves as well. We put together small funds and syndications to purchase them as well. And so we're on a very good track record to continue to do that. And, obviously we want to continue to try to be the face of the small bay flex space. And so just increasing our knowledge base across the U.S. because all these markets are different. But it's just continue to improve in it and figure out where and how to make money in the asset class.
Nice. Well, you guys got a good domain for it. Flexbusinessparks.com. That's a killer right there.
I appreciate it. It'd be like having selfstorage.com.
If only. Right on, man. Well, that wraps up the initial portion here. It's time to jump into the quick question round. Are you ready?
Let's go.
Let's do it. Starts with education, can be any form, can be movies, books, whatever. Just give me 2 recommendations, one for general life wisdom and then one for real estate.
General life wisdom. Actually, some people don't like them, but I read the 10X Rule by Grant Cardone a long time ago. I don't know if you ever did or not.
Mm-hmm.
And I had a lot of good takeaways from it. I know he's a salesman, but it was a book that kind of gave you some good motivation in it as well.
Yeah.
Kind of like Joel Osteen. He's a pastor and he writes good books that are really feel good books about just how to improve your life and things of that nature. And so I'm big on that, but I did like the 10X Rule. I think that's good for salespeople that are getting into it. I think at the end of the day, the bottom line that I took away from it is just work 10 times harder.
Yeah.
It's kind of what the book said. And
everything is harder than you think. Just go into it knowing that.
And so I did like that one. And then obviously our book that we made, Flex-Based Domination, I think that's probably one of the best books you'll find on the marketplace.
There you go. And if people wanted to buy that, they'd find it on Amazon.
Oh, it's on Amazon. Yeah.
Perfect. All right. Next question is for your younger self. Let's go back to the Cody, who is still a car salesman back in, I don't know if you mentioned the year, but back in the day. Go back to him, look him in the eye, give him one piece of advice moving forward. Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com, so if you are interested, head on over there. With that said, let's get back to the podcast.
I would probably say just have a little bit more patience. I was very impatient, very, very impatient. And so trying to rush things, trying to push things, whether it's personal or business, I was very impatient individual. And I called it, tenacity and aggression, but it was impatience at the end of the day. Yeah. And so I think sometimes when you push things too hard to make something work, whether it's personal or business, it just sometimes doesn't work out the way you want it because you're trying to force it. And so I think just have a little bit more patience and you'll be good to go. And now I got all the patience in the world. I'm like, it'll get done when it gets done.
Happens.
Yeah. It's a lot different now.
That is that's a difficult lesson to learn. It's kind of like one of those balancing acts. You don't want to be too relaxed and too unconcerned about what happens, but you don't want to push too hard because and care so much about the outcome. And finding that golden mean is a difficult life lesson to learn. It definitely comes with age, I feel like, but
yeah. But there's a million things I would have told myself. I would have told myself to eat better, to exercise. There's a million things.
All of the above. Right on. All right. Next question is about the U.S. It is a big place. There's a lot of opportunity. Give me the single metro you're most excited about investing in today.
DFW.
DFW. It's a good one.
I think so. Yeah. San Antonio's also a good one.
Yeah. Anywhere in Texas, really. Anywhere in that triangle.
Austin's gonna be it's a little tougher. Just because it's so hot and such high demand and prices out there a little higher, and you can get much better deals, I believe, in Houston, DFW, and San Antonio. But yeah, I like DFW a lot. There's a lot of different aspects to it, and as you know, I mean, they're almost two different cities.
Yeah.
Well, they are two different cities, but Houston's just Houston. DFW is just known as DFW, but Fort Worth mentality, Dallas mentality are two very different mentalities.
Yeah. Yeah, and it's a massive city. I remember flying into I can't you guys have two airports out there. I think it was
Got Love Field and DFW.
yeah, one of the two. But I just was thinking like this is a massive airport. I was driving through it. I had my rental car and I was driving through it, and I feel like I drove for like 10 minutes and I was still in the
Yeah,
airport. It was nuts.
yeah. They keep
All right.
expanding it.
Keep growing. All right, next question is finding deals. It all starts with getting in contact with the seller and penning up that purchase agreement. So, what is your favorite way to generate leads and find good deals?
So our best way is we call directly. And so we love reaching out to the owners of these parks and saying, hey, this is what we specialize in. We specialize in selling it. If you're selling today or tomorrow, it doesn't matter. We want to be a resource for you up until that point. And so we maintain good relationships with people. And I mean, there's people that call us all the time that have never sold with us and still own the building from 10 years ago. But we know at some point that they'll sell. And if not, whoever they pass it down to, we'll get them to sell. And so, we stay very diligent on owners, but we're also very niche specific too. And so, we're not calling on retail, we're not calling on multifamily. I mean, we're just calling on our craft only. So it's a little bit easier than people that are more on the generalist side of real estate.
Yeah. Yeah, I have been on that side, especially when I got started in commercial. I was looking at all assets classes because I thought they all had their benefits and I just wanted to do them all. But when you focus, that's really when things work because you know how to have those conversations. You can build out your database on that that specific niche. And yeah, so once you focus in on one or two, we do two, but I even feel like, focusing in on one is the way to go. So you guys are doing it right.
Oh yeah. There's so many people that have like a retail center over here and a piece of land over here and an industrial leasing over here. And it's just like, that's just too much.
Yeah.
Too much.
You can never really keep it all together.
Yeah.
All right. Let's go to the next question. And this is about lessons learned. Not every deal that we get into goes the way that we expect it. Sometimes a wrench is thrown into the mix and things go sideways, but that's when we learn our biggest lessons. So what was a deal that went a little bit sideways for you guys? And then what was the lesson you pulled from it?
A deal that went sideways and a lesson. I mean, look, deals go sideways every now and then. That's just part of the game. I think whenever they go sideways, and I'm trying to think of one that did, we did have one that did, and it was I think what we learned was, understanding where the seller's position was. And at the end of the day, they just weren't a seller. We had a guy that wanted to sell. We brought his deal out to a bunch of our investors, gave him several offers. He wouldn't move a penny on it. And not that you have to, but I'm a big believer if you don't want to sell, don't list it. And so, I told him, hey, this can make us look bad if you have a deal for sale and we're not even responding to offers and whatnot. And so at the end of the day, probably should have vetted him a little bit better. But as sometimes, sellers think they want to sell and they get into it and they have a little bit of seller's remorse. And, look, I'm a classic car guy. I got a bunch of classic cars and I've sold some that I wish I hadn't. But, when you say you're going to sell something, you need to sell it. And so that was actually a recent deal that we had that we gave an offer and he didn't want to do it. And so, but some things are just out of your control, and we just say, hey, look, you don't want to sell, you don't got to sell.
Yeah, it is. And I've been there. Saying you're going to sell a deal and then getting to the actual action of selling the property. And then you're like, do I really want to sell this? I put so much work into it. It's cash flowing right now. So it's a tough one, but yeah, once you make that decision, you got to stick with it. Because there's a lot of people involved and you don't want to waste people's time. So, that is what was the lesson there?
The lesson was, I don't know, actually.
Vet people more. There you go.
Vet the seller more. Hey, do you really want to sell? But it's not as emotional in commercial, like in residential. Which I was actually talking to a residential realtor the other day, and they say they get that quite a bit. And, because it's a lot more of an emotional asset class or a lot more emotional transaction. But no, the lesson was, just because, we're expected to do our job. We expect everybody to do their job.
Yep.
And so just make sure the expectations are outlined.
There you go. Communication. All right. That leads us to the very last question. This is for the listeners. You've given us a lot to think about. So I'm sure people want to reach out, get in contact with you. This is a two-parter. Where can they find you? And then what can they expect when they reach out?
FlexBusinessParks.com. Easiest place to find me. Any of the guys here. Go there, check it out. Anything you need to know about Flex Business Parks, you'll find it there. That's the best place if you want to learn about the asset class or get in contact with us. That's exactly how you do it.
Perfect.
And we'd love to talk to you. We'd love to talk to you.
There you go. Give them a call. Just have a chat. That is flexbusinessparks, plural.com. I will put that link in the show notes. So if you guys want to reach out, just click the little more in the description. It'll pull down that full description. And in there, you can find the link. All right, Cody, that wraps it up. Thank you very much for hopping on the show.
Yeah, thanks for having me.
Absolutely. For everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions, reach out to me, Gabe at therealestateinvestingclub.com. If you want to support the show, just give us a review on Apple or Spotify or whatever it is that you're listening to this on. Other than that, I hope you guys have an absolutely fantastic week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at Gabe at therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.